LNG crisis crushing markets 5 sectors in free fall, get out now? If you own stocks in any of these 5 sectors, the next 60 seconds could save you thousands of dollars, because what's happening in the LNG market right now is unlike anything we've seen in decades, and most investors have absolutely no idea what's coming. Liquefied natural gas. 3 words that probably don't keep you up at night. But here's what should: the global LNG supply chain is fracturing *, and the shockwaves are tearing through the stock market in ways that won't show up on your portfolio until it's too late. So what exactly is going on? Let me paint you the picture. It's a massive global industry. But right now, we're facing a perfect storm. Shipping routes are disrupted, and demand is absolutely exploding because countries are scrambling for energy security after everything that's happened with Russia and Ukraine over the past few years. It creates a domino effect that crashes through entire sectors of the economy. And NSE and BSE? They're just starting to price this in. Which brings us to the 5 sectors getting destroyed right now. Sector number 1, chemical manufacturing. Natural gas isn't just fuel, it's a feedstock. Companies that produce plastics, fertilizer, and industrial chemicals need LNG as a raw material. When LNG prices double, their profit margins evaporate overnight. We're already seeing major chemical manufacturers reporting earnings warnings. Stock prices in this sector? Sector number 2, utilities and power generation. This one's obvious but brutal. Power companies that rely on natural gas are getting squeezed from both sides. They're paying more for fuel, but they can't always pass those costs to consumers immediately because of rate regulations. Sector number 3, industrial manufacturing. Think steel, aluminum, cement, any heavy industry that needs massive amounts of energy. These companies operate on razor-thin margins. When energy costs spike, they either shut down production or bleed money. And if you own industrial stocks, you are feeling it. Sector number 4, transportation and logistics. Here's where it gets interesting. LNG is increasingly used to fuel cargo ships and long-haul trucks. When LNG gets expensive, shipping costs explode. That means everything from Amazon deliveries to international freight gets more expensive. Logistics companies are seeing their fuel costs up 30 to 40% year over year. Margins are collapsing. Stock prices are following. And sector number 5, this is the one nobody's talking about, agriculture. Wait, agriculture? Yes. Because modern farming is incredibly energy intensive. But more importantly, fertilizer, which keeps crop yields high, is made from natural gas. When LNG prices spike, fertilizer becomes unaffordable. Farmers cut back. Crop yields drop. Food prices eventually rise. And agricultural stocks? They're caught in the crossfire. We're seeing grain processors, farming equipment companies, and agribusiness firms all taking hits. Now, you might be thinking, energy prices fluctuate all the time. Why is this different? Great question. 3 reasons this is not just another price spike. First, the timeline. Previous LNG disruptions resolved in weeks or months. Analysts are saying this one could last years because we are not just dealing with temporary shutdowns, we are dealing with fundamental shifts in global energy infrastructure. Second, the scale. This isn't regional. It's global. Europe, Asia, and North America are all competing for the same limited LNG supply. That kind of competition drives prices to levels we've never seen sustained before. Third, and this is crucial, central banks are still fighting inflation. Which means they can't just print money and bail out affected industries like they might have in the past. Companies are on their own. And that means the weak ones? They're going to fail. So what do you do if you're holding stocks in any of these sectors? Look, I'm not a financial advisor, and this isn't financial advice, but here's what the professionals are doing right now. First, audit your portfolio immediately. Check your exposure to these 5 sectors. If you own mutual funds or ETFs, look at the holdings. You might have more exposure than you think. Second, understand that not all companies in these sectors are equally vulnerable. Larger companies with diversified energy sources and pricing power can weather this. Smaller, over-leveraged companies with high energy costs, they're at serious risk. Third, consider this a hedge opportunity. Some companies actually benefit from LNG crises. LNG producers, pipeline operators, energy infrastructure, these stocks move in the opposite direction. And finally, stay informed. This situation is evolving daily. What's true today might change next week. Set up alerts. Follow the data. Don't let your portfolio get blindsided by something you could have seen coming. The LNG crisis isn't going away tomorrow. It's going to reshape markets for months, maybe years. And the investors who understand what's happening right now are going to be the ones who protect their wealth, or even profit from it. If this video helped you understand what's really going on, hit that like button so more people can see this before it's too late. Subscribe if you want to stay ahead of market moves that actually matter. And drop a comment, tell me which of these 5 sectors surprise you most, or if you're seeing this impact in your own portfolio.